Hi everyone, and welcome to our Technical Sundays. I'm gonna walk you through a couple of fundamentals for next week, and then we're gonna jump to technical analysis. So, the Japanese Golden Week, which I did mention in my Instagram stories, is probably gonna lead to some potential hazardous conditions for next week in the markets. I even got an email from my broker to either extend my margin or close my positions. So, the Golden Week is gonna be roughly 9 days long. That means that during the Asian session, all the markets will be closed, and that's going to result in low liquidity. That might mean that we might have a flash crash. So for some of you that don't know what a flash crash is, this is the last time we experienced it. It was on the 3rd of January. So a flash crash is when multiple orders come alive at the same time and drive the market towards one direction or another, which you would say it's normal, but it's not normal in a sense that this is a 30-minute candle. If we break down in the 5-minute candle, this movement here is for 5 minutes. So it's from 1.86 to 1.46. That means that for 5 minutes, the market moved 400 pips. 5 minutes. So regardless of how fast you are, you're bound to either profit extremely from this or lose a lot of money. So some people would say, okay, what if I have my stop loss here? When the flash crash occurs, the zone that you have here, for example, is a stop loss. You're probably going to get filled over here because this happens in a matter of seconds, minutes, and it's so volatile and it happens so fast that it might miss your stop loss with 200-300 pips, or you might just get a margin call and all your positions are going to be closed due to low margin. So that means you can blow an account quite fast, and in the sense that you cannot control it. You can't control it. It's either going to hit your take profit very fast or your stop loss very fast. And it's like, yeah, it resolves more to gambling. It's like a 50-50% chance. So it's not a good idea to be trading during these hours. So my personal recommendation for next week would be to only focus on day trading and day trading the European and New York session. And after the end of the New York session, you should probably close your positions, because if you're swing trading, you never know what's going to happen during the Asian hours and you might get cut short. So yeah, that's something to be very careful about next week. And yeah, let's jump to technicals. So one of the pairs I'm going to be looking at next week is the US dollar and the Swiss franc. I did my technicals on this earlier before I started recording. So just from simple price action, just opening this chart, only from these 4 rejections here, for me, this is boom, straight away a sell signal. Yeah, straight away, boom, downside. So I would roughly say that let's pull up the fib so we can see the exact zones. But yeah, as the moment we pull out our Fibonacci, you can see that the 38.2 straight away resolves with our support zone. And if you go back, you can see that this zone was also a previous resistance, which was tested multiple times. If you go back, if you start from here, 1, 2, 3 tests here, boom, resistance, boom, boom. Even after this test, you can see what happened. Boom, 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 couple more tests. So for me, this means that this zone is a zone to watch out for. It was a previous resistance, which most of the times can resolve in a support. And you can see from the trend line that I drew that essentially this is in an uptrend. I had a test here from our highs. Here it managed to do a double top, but after that it broke the zone. So the big resistance zone is now broken. So what I'm seeing here, even the EMA might show off as support. So what I'm seeing here is going to probably be a test of this zone, and then we're gonna skyrocket. Essentially, the US dollar, if you check the dollar index on a weekly, I'm gonna run through this in a bit, but it's in an uptrend. And as well, it had quite a bullish week, so this may resolve in a slight retracement in the dollar, which gonna mean the Swiss franc is gonna retrace, and then we might rocket. So yeah, let's jump to the 4 hour, because normally I use 4 hour for my execution, but yeah, from what I can see here is you need to find a supply and demand zone which has high liquidity in it. Yeah, I'd say roughly here. So what I would expect for next week is looking after this zone, or even a potential touch of this zone. If this zone is touched straight away, that's a signal for you to open a short position. But still, I would say a touch of this zone would initiate a potential short position from here. And having this zone over here, I would put my stop loss. Never put your stop losses on a zone, on an exact zone, because some of the brokers use this as a hunt stop loss. So I always put my stop loss roughly 3, 4, 5 pips over this zone. And if we draw down here, this is a perfect almost 1-to-4 risk reward ratio open position. So yeah, for this week, I think that I would be looking to short this pair either from this part here, or even perfect, it would be from here all the way down to here, and then after we touch this zone here, which is a very big zone, after we touch this zone here, I would be looking for a potential. This zone essentially is gonna be a make or break zone. It's either gonna retrace from here and go higher and break the zone, or potentially it might go through the zone and come down to test the trend line. Looking at a bit more longer term, taking into consideration that this week won't be having much volatility. So this is it for the Swiss franc, looking a bit shorter on this. Then I'm gonna jump to the dollar index, which normally if you trade dollar pairs, for example, the New Zealand dollar, if you trade the USD dollar, Swiss franc, euro dollar, you always need to look at this because this is the index of the dollar, how it's moving against other pairs combined. And you can even see on the weekly, it's an uptrend, multiple touches of this trend line, forming lower highs, lower lows, lower highs. Oh yeah, sorry, higher highs, higher low, higher high, higher low, higher highs, higher lows, boom. Managed to break this big resistance zone. So now you can see that just from drawing this, I'm gonna start drawing the zones from the weekly, then we're gonna jump to the daily. It's called top-down analysis. So you start from the weekly, you go to the daily, to the 4 hour, you can get more exact and precise zones. So the other zone I would mark here is, I would say here, yeah, roughly here, boom. And you have a supply and demand zone here, which was touched numerous times. And as well, you can see that something that was previous resistance before now becomes support. So here was as a resistance. When it's broken, came up, retested as support, went up again. We jump to the daily, see what we can see here. Yeah, amazing. I like to keep my charts clean. I don't use many indicators, sometimes none. So what I'm seeing on here, we did have this push from this trend line over here, where essentially the big move started. You can either draw it from here or here, up to you. I like to draw my Fibonacci from a longer term perspective. So yeah, amazing. You can see, boom, straight away. On the Fibonacci, most of the time, support and resistance are gonna come from the Fibonacci zone and vice versa. So 96.7, the 0.61 zone, you can see you had 1, 2, 3, 4 touches. So I would say I would move this zone a bit lower so it can cover everything. And you have the 0.5 pip as well, which is 97.04. Normally on the pairs I trade, most of my levels, I already know them. So 97.2, if you go back, is a very strong zone. It's a psychological zone that couldn't be broken many times on many tests. This is the first time it was tested. Straight away, you gotta retrace from it. Had a couple of tests here before as well. One more here. Have test here. So essentially you can see that this being a strong resistance essentially turns into a strong support. So for the dollar index, what I might be looking at is to retrace after this strong movement this week. And here you can see signs of exhaustion as well. You see the retrace from here, buyers are stepping out, sellers are coming in, see buyers try to push. This essentially is a pattern itself. So yeah, I would be looking for a retracement in the dollar index. I would say either roughly to this part here, or maybe even all the way down here. And then if we get our enough, depending on the price action, it either can go down and retest the trend line again, or it might pop back up. But as well, you need to do your analysis every day, because every day brings a new candle to the market, and that candle can speak a lot for the future movements. So I would say that this week I would be looking to short the dollar, which means that if you short the dollar, the Swiss franc is gonna go down. So essentially, you see how things start to add up. The dollar starts to go weak and it goes down. That should resolve in the Swiss franc going down as well. So these two confirm each other quite well. So I would be looking for this position throughout this week. The next position I would like to drop on is the gold. So looking at gold now, I did actually have a position on this last week. From this zone over here, managed to go in. I closed it roughly here on the retest of this zone. Quite a good profit as well. So essentially the 1266 zone was a previous Fibonacci zone, as well as I do have this trend line which is dating back from all the way to 16 August last year. You can see it had 1, 2, 3 tests to the upside, and the fourth one was here. So essentially this zone is quite strong, as well as it matched my support zone, which was a previous resistance again. And for me, gold longer term might be bullish, but now in the short term you can see it's forming lower high, lower lows, lower highs, lower lows, lower high, lower low. So it's quite bearish looking short term. You can even draw this trend line over here. So what I would be looking at for gold for next week would be a potential test of this resistance zone, 1295, as well as hitting the trend line. And from there, I would be looking to short this pair, either to the liquidity zone, either to my trend line. So in a sense that if this manages to break the trend line, I would expect a retest. And if the trend line is retested, then it can have further downside. But like I said, you need to watch the candles that are forming every day, because every day gives a new idea and signal for the next day and how the market would be moving. But for now, for gold, I'm looking for probably hitting this zone, and if this zone is reached, judging on the 4 hour, if I have enough confirmation, I am going to go short on this pair. And I'm gonna finish off with the New Zealand and US dollar, which I did have a position on Friday. I posted here. Managed to hit this zone, which was a previous Fibonacci zone as well. So I will start from here. So it didn't manage to close above this zone, but like we said, the dollar might be heading for a slight retrace. So I would be bullish on this pair. Essentially, it's in a very big consolidation range, as you can see. It's been consolidating for quite a lot. And we even had a test here. So for me, this is first, second test, double bottom pattern. So it has potential to go further more to the upside. I'll say roughly to the zone 67.5. And after a test of this zone, depending on price action, it can either continue to my longer term resistance zone, or it can retrace from this zone and probably go back to, I'll say, this zone here. As you can see, there's a slight pattern in price as well. You can see that this zone is a 0650, 0660, 0670. You can see that some of these pairs actually do like round numbers, 685, 675, 670. But this happens early, and you shouldn't take it into very big consideration. It just happens occasionally. But yeah, I would say roughly to this zone here, which is a 100 pip move. And from there it can go either to the upside, judging on price action, or retrace to the downside, which we would still need to have confirmation to jump into any positions. Euro dollar, I don't like the price action of euro dollar this week. It was very choppy behavior. So I would probably avoid trading it, I would say, unless there's a test of this zone, which for me would indicate that I can open a long position, which again is going to correlate with the dollar going down. So dollar going down, euro going up. So I would say probably a retest of this zone and jumping straight up, but bearing in mind that euro is in a downtrend at the moment, not at the moment, but quite for a while now, as you can see. A previous zones all the way starting from January, going down, going down, going down. So potentially this zone might be looking to retrace. This pair might be looking to retrace. Touch the zone here, potential long. You can either go up here to be the 0.5 fib, but essentially we need a break of this trend line and a break of this zone, which was a previous support, a very strong support, which managed to do a double bottom here. So this is a previous strong support. So confirmation to the upside would be breaking this trend line, this zone, coming back to retest it, and then going up. But let's see, longer term, euro dollar looks short. And yeah, I think that's roughly it for this week, guys. I hope you enjoyed the analysis. If you do have any questions, feel free to DM me on Instagram or visit our website and pass on some questions or some pairs that you would like us to cover next week.